Good afternoon, everyone, and welcome to another edition of Trending Thursday here on YouTube. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always my pleasure to be here. Glad that you're all here. I see there's a lot of people in the room today. You guys are already talking amongst yourselves. If you can hear me, by all means, shout out ooh-wee. Yeah, there we go, Jay. If you can hear me, shout out an ooh-wee. That's the rallying cry behind VectorVest. So I want to see the ooh-wees coming to the room. You need to take over, Joey, overthrow the man. Man, what are you and Jay talking about? Holy smokes. I just said, I either have a cold, the flu, or coronavirus, so no kissing Badger today. Oh, goodness gracious. All right, Badger, we won't be doing any of that. So again, Glenn Tompkins, my pleasure to be here. Glad you guys can hear me. I'm going to get this room popping and cracking today, for sure. We're going to have a lot of fun. We're going to learn about what's going on in the market. We're going to see what stocks are moving the market. For those of you who are brand new, don't forget to comment, like, and subscribe. Bigger thing of all, I want you to comment, and I want you to subscribe. So, Joey, right now, how many subscribers do we have?
What did we say earlier, 9,500?
About 9,500. We're trying to get to 10,000 subscribers. You guys have been moving the subscriber needle huge in the last couple of weeks. So, man, oh, man. Continue to do that. Help us to grow up to 10,000 subscribers. So if you're new, this is your first time here, do not forget to subscribe to the VectorVest YouTube channel. If you have friends who are interested in learning more about the stock market or the commentary that we give here, they don't have to even be subscribers. Share the video with them. Let them come. Hopefully they will subscribe to the videos or the live stream as well. So do not forget to do that, and we'll go from there. All right, got a lot to cover. Again, for the new people, what is Trending Thursday all about? We look at news, we look at stocks that are making the news. We use the power of the VectorVest software to analyze those stocks. We'll go through all of those, and at the end, I will give you an opportunity. You can take that away. At the end, I will give you an opportunity to look at your own individual stocks. So any of you who are not subscribers, you're going to get an opportunity to get a free stock analysis on any stock that you track. Joey took away my comments, so Joey will let me know what comments need my attention. It gives me an opportunity to stay on track, all right? Because you know me, I'm going to try to answer everybody's questions in the room, but I'm going to let Badger do a lot of the answering. He does a great job of moderating for us, along with Joey. So Badger, I'm going to start putting some onus of responsibility on you, if you're willing to take it, to address a lot of the questions that come up if you can answer them. If not, Joey will flag those questions for me. So Badger, have at it, my friend. And you know, I got people like Jay and Saborium that can help answer questions of new people as well. So I'm going to task all my regulars to help me out here. That keeps me on track so that I don't always concentrate on the chat. But Joey is going to let me know what really needs my attention. All right, for those, as we get started, we always start off with what's going on in the market, right? So we do a nice little brief overview of what's going on in the market, and we're going to start with that now. I'm going to open up the home page, and from the home page, a lot of information needs to be gleaned right from there. The home page is your gateway into the software, and the home page is going to provide for you a lot of different great information about what's truly going on in the market. Not what the pundits say, not what the talking heads say, but what's really going on in the market, because we have some indicators that take a lot of the guesswork out of what's going on. So on the home page, we do have at the top our daily traffic light into the market, just like the red, the yellow, and the green that you would see on a traffic light. Right now, the color guard, as of right now, and we are using real-time data, so we're going to watch this data tick real-time throughout the day. As of right now, our market timing gauge is one tick into the red, the color guard is mildly bearish, and we give guidance. VectorVest does not advocate buying any stocks at this time. That's straightforward. So whether you're a subscriber or not, especially if you're not a subscriber, we're telling you it's not the right time to buy stocks. Down below, we have the color guard. This is our 6-day snapshot of what's going on in the market. And the color guard tracks 3 of our market timing indicators. Price, which is the price movement of our VectorVest composite. That's an indexed arithmetic average of all of the stocks that we track. And currently, that indicator is tracking 8,248 stocks in one ticker symbol. We track its price on both the day-over-day and week-over-week basis. and we assign tiles on a daily basis. RT, which stands for relative timing. This indicator is cast on a scale between 0 and 2, and it looks at the underlying trend in the market. Below the value of 1, unfavorable, and the market is in a downtrend. The lower below 1 it goes, the faster in a downtrend it is. The next indicator, the BSR, or buy to sell ratio. This indicator looks at the overall health of the market, and I think we're the only people in this industry that has a true indicator that looks at the health of the market. The buy to sell ratio looks at the amount of buys recommendations we have in the system compared to the amount of sell recommendations we have in the system, and it lets us know currently almost 4,000 sell recommendations, almost 500 buy recommendations. Well, the sell recommendations outweigh the buys by a lot. So the market is definitely showing signs of weakness. When the market is moving higher, more stocks become buy recommendations as the market trends higher. But as it falls, more sells take over and the market is showing signs of weakness. So those are the three indicators that we have in our color guard, and we track their indicators on both the day over day and week over week basis to assign the tiles the colors of the tiles. Noticing that still more red tiles in our 6-day look back period, the market is showing more signs of weakness. Red lights, when you get to a red light, what do? You stop. In this case, looking at the color guard, you stop buying stocks long, and we've been in that scenario for a minute. All right, so looking at the color guard, looking at the market timing gauge, all of those things, let's go look at the indices. Everything is down. The Dow is down another almost 1,000 points for the day. The NASDAQ is down almost 3%. The S&P down over 3%. And that VectorVest composite that tracks the movement of 8,200 stocks is down almost over 2.5%. The market is experiencing another down day. But let's truly see what's going on in the market, and we're going to get into our first story. Now, the first story, we're always going to talk about what's going on. This one? Yep. Always going to talk about what's going on now. Well, the economy is still overall doing well, right? How about over the last week, March 4th, private payrolls up 183,000 as hiring shows no signs of the coronavirus. So take and separate aside the market, the economy. They are two different things. Now, the market could affect the economy, but I want you to know that when you're looking at the economy, there's three things that move markets globally: earnings, interest, and inflation. All right, now step the economy to the side. Earnings, interest, and inflation. Earnings are good, the market's bullish. Inflation and interest are the bad guys, and we want them to be low. Well, guess what? Interest is still low. It's even getting lower all over again, and inflation is right in line with the target that the Fed has. So overall, the economy is doing good, but the coronavirus is slowly but surely affecting the economy. So jobs are good, and then let's go into what the Fed, which is now the market, look at what's going on in the economy. What the Fed did, the Fed dropped the interest rate another 0.5 point to help bolster the economy. The Fed's job is to look at jobs and to look at inflation. And when they drop the interest rate, that helps to spur up an economy. Now, the economy needed some spurring because of the influx of the coronavirus on what's going on in the economy. So the Fed said, all right, we're going to help you guys out a little bit. We're going to take the interest rate down another 0.5 point. That helped for about an hour when they did it. And after that, the market said, whatever, coronavirus is bigger than just the Fed dropping the interest rates. Guess what? Now this is still on the Fed's radar to probably think about dropping the interest rate again to still keep the market buoyed or the economy buoyed as the coronavirus is weighing in. So keeping that in mind, there is a difference between the economy and the market, but they can affect one another. But I want you to understand what three things actually move markets globally. Earnings are still up. They may be coming down, but earnings are still positive overall. And you know something? Some companies like Apple and Microsoft are already out there guiding lower going into the next quarter. So now, once it affects earnings, once the coronavirus affects earnings, then that's going to affect the market. But the economy and the market are two separate things. Even though I think we get them all garbled up together into one thing, they are not. Understand that. So We did turn around. The Fed did drop the interest rates by 0.5%, or a half point. Let's go take a look at our watch list of stocks for today. And we always have in our watch list, where is it at? We always have in our watch list the two indicators that we use for tracking the market. Let's go YouTube trending Thursday. What's today's date? The 3/5. There we go. Here's our stocks that we're going to cover today. And the two of them that we're going to look for as far as the market is concerned is going to be the VVC. Where's it at? The VVC and the spiders. For those of you who are not VectorVest subscribers, the spiders or the S&P 500 is a way to go. So as we look at it, man, both of them are holds. The VectorVest composite is fairly valued right now. When you look at the spiders or an ETF, the value and the price will always be the same. When we're looking at what's going on with the VectorVest composite, RV on the market, below 1. So we don't have good upside potential. Safety on the market, relative safety, below 1. So the market is not in a safe spot right now. Notice that on the ETF though, RV and RS are both at 1. That's how we track ETFs. On the VectorVest composite, the timing, relative timing on the market, still below the value of 1, whereas on the spiders it's just a little bit below 1, but nonetheless, both of them are in a downtrend right now. And the earnings growth rate on the market or the VectorVest composite still is sitting at 4%. We do not calculate the earnings growth rate for the spiders. All right, let's take a look at these two on a graph. Folks, this is the market. Whether you are a subscriber looking at the VectorVest composite or whether you are a non-subscriber looking at the spiders, here's where the influx of the coronavirus kicked in, market fell. If you are a VectorVest subscriber, we protected you prior to this fall. You guys have already been watching the daily color guard reports and the strategies of the week that talked about how, as a VectorVest subscriber, you were protected. If you're not a subscriber, I would suggest that you think about taking a trial where you can get access to this information on how we saved our subscribers coming off of this top. Today's information, big down day. Notice that coming off of Friday's low, up, down, up, down. Let me zoom in a little bit. Up day, down day, up day, down day. You know what this is called? This is called volatility. The market cannot establish one direction or another which way it really wants to go, but overall it is down. We do have a level of support, which was Friday's big close to the downside, and now coming up off of that, the market is having a hard time getting out of its own way, and the volatility, the fear of coronavirus is still affecting the market as a whole. Let's move over to the S&P 500, same kind of thing. All right, down day, up day, down day, up day, down day, back and forth, the epitome of volatility. As a volatile market, what do? If I'm a little bit more conservative or a little bit more prudent, I'm sitting on the sidelines waiting. If I'm a little bit more aggressive, I'm licking my chops, because on the up days, I'm taking advantage of the up days. On the down days, I'm taking advantage of the down days. If you don't fall within that category of investor, you're waiting for the market to come to you. Don't try to catch the falling knife. Don't try to guess at what the market is going to do. Let the market come to you. And as a VectorVest subscriber or as a reader of graphs of the market, you are understanding what's going on. Don't let the talking heads talk you into something that you don't need to do. All right, so keeping that in mind, Joey, any questions on our first story yet? No? So either I have you guys captivated or confused as hell. It's one of the two. By the way, say hi to Joey. Say hi, Joey.
All right.
Joey is my producer. He sits in the background. He helps to make sure that everything is moving the way that it does. So if Joey's saying that there's no questions right now, let's move to our next story. The next story, I'm going to be looking at tech stocks that are hitting the news. Intel drops a bomb on the 5G network. Intel has announced a complete portfolio of 5G network infrastructure silicon. Snow Ridge, Atom 20, blah, 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 blah. All of a sudden, networking will become a $25 billion market by 2023, and it was a $5 billion for Intel in 2019. Now you understand how these tech stocks are really moving into the realm of 5G and at a high rate of speed. So I wanted to look at what these tech companies were doing. That's one with Intel really ramping up for 5G. Let's go look at Microsoft. Microsoft, though, drops after the coronavirus-related outlook warning. So now not only is coronavirus affecting the economy to the point where the Fed dropped the interest rates, but more and more companies are going to come out like Apple did and say that, you know, we're guiding lower for the upcoming quarter because coronavirus is affecting us in a bad way. Microsoft doesn't expect to meet its third quarter guidance for the more personal computing segment due to the coronavirus-related impact to the Windows operating system and Surface. The company had guided 10.75 to 11.15 billion in revenue for the segment. The rest of Microsoft's guidance remains unchanged. So it looks like from the computing standpoint, the personal computing standpoint, Microsoft is feeling the effects due to the coronavirus. And we're going to go to another one. How about Apple? Chart shows S&P bounce may be ephemeral, but Apple poised to rally. Everybody knows that Apple is my favorite stock, right? And this is from Jim Cramer. No matter what you say about Cramer, I think Cramer is a smart individual. I do understand that he is an entertainer. All right, I do know that. But he's got a lot of market savvy behind him. And, you know, the charts is interpreted by Carolyn Borodin suggest that some stocks might be a safer pick here, like Apple, but the broader S&P 500 might not be out of the woods yet. So the Apple stock could be poised to rally 20% if it can break through a key ceiling of resistance. We're going to take a look at Apple. So that's also another tech stock. Let's go to one more. Still Apple, but Apple's supplier now. Apple supplier Skyworks cut forecast on the supply chain hit. So not only is Apple getting affected adversely to coronavirus, even though the prior story said that Apple could be poised for a 20% rally, but any stock dealing with Apple is feeling the effects as well. So let's take a look at these tech stocks. Let's go back to the software. Let's take a look at the tech stocks. Here they are. Microsoft is one of them, Intel is one of them, Apple is one of them, and Skyworks is one of them. Let's analyze them real quick. This is the power of using the VectorVest software to corroborate the story that whether it's Cramer or whoever gives, right? Microsoft trading at 167, a value of 111. For those of you who are new, value is what we feel the stock is currently worth. We look at earnings. We look at earnings growth rate in order to evaluate what we feel the stock is currently worth. It is not a price target. It's what we feel the stock is currently worth. Microsoft is currently trading over its value. We look at Intel is currently under its value. Our mantra is to have you in safe undervalued stocks that are rising in price. Now, because the stock is overvalued doesn't make it a bad stock. It means that people are willing to pay a premium to own the stock, and if enough people are willing to pay that premium, it will drive the stock's price higher. All right, so we're going to analyze it a little further to still see if these are what we like to call, what's the word I'm looking for? Glamour stocks, all right? Stocks that are overvalued but still have upside potential. Apple, currently slightly over its value, and Skyworks under its value nicely. Not a ton, but nicely. Now let's look at our indicators, RV, RS, RT, VST, CI. All of these indicators are cast on a scale between 0 and 2. We make it real simple. If the indicator is above the value of 1, it's favorable. If the indicator is below the value of 1, it's unfavorable. That makes it real simple to understand the value of these indicators. Now, relative value looks at a stock's long-term upside potential. Its potential as compared to an alternative investment in a AAA corporate bond. Layman's term, will this stock over the next 1 to 3 years outperform a AAA corporate bond? You buy a AAA corporate bond, it matures, you get it all back with a little interest. So it turns out to be a pretty safe investment. But I want to determine, do I want to hold that AAA corporate bond over the next 1 to 3 years or the stock? Well, Microsoft's got a relative value of 1.18. This tells me that Microsoft should outperform that AAA corporate bond by 18%. I wouldn't mind holding that stock longer, even though the stock is overvalued. This now becomes a glamour stock. The next one, Intel, undervalued, Upside potential, good. 1.37 should outperform that AAA corporate bond by 37% over the next 1 to 3 years. Apple, slightly over 1, should still outperform that AAA corporate bond. Skyworks, on the other hand, below the value of 1. The AAA corporate bond might be a better play long-term than owning Skyworks long-term. Safety, notice though, all of these stocks are safe stocks. They're all above the value of 1. These are stocks that have the consistency and predictability of company financial performance. Do these companies meet or exceed earnings expectations quarter over quarter, year over year? I am not going to look at Oracle yet. This is what I'm going to do. I know it's relative cool hand loop, but besides, I've got the stories on these. I don't have a story on Oracle, but I will give you an opportunity to look at Oracle later. All right, I will do that. Remember, the stories that we have in this watch list are the stories that have made the news. Oracle, for some reason or another, didn't catch my attention on the news front. Thus, the reason is not here yet. But I will definitely take a look at it for you later in the presentation. The next indicator, RT, tells me if the stock's in an uptrend or not. Microsoft, in an uptrend. It's above the value of 1. Intel, not in an uptrend because it's below the value of 1. Apple is in an uptrend. Skyworks is not. And then I can see which ones of the stocks are sell recommendations. It looks like Skyworks is the only stock that has a sell recommendations. The CI, or Comfort Index, looks at a stock's ability to withstand long and lengthy price declines. Above 1, the stock goes up in price more than it goes down. And last but not least, the growth. Are these companies growing their earnings? And how about Skyworks, who have below relative value, not moving up in price, does have a VST of 1.06, but look at they're growing their earnings at a negative rate. So let's do one last thing. Let's take a look at these stocks. Okay. Which of these are the best plays in this field? Well, Microsoft, let's put this, I do like over the last year, Microsoft looks good. Has it been affected by the coronavirus? Yes, it has. But look at the beautiful move of the stock over the last year. Look at the earnings per share. Earnings is the engine that drives the stock's price higher. Look at the earnings per share and doing so in big volume. But coronavirus has hit it. Looks like it might have found a floor or level of support bouncing up. I'm not ready to touch that yet. Looking at Intel, also coming off a level of support. Not ready to touch that yet either. Looking at Apple, man, Apple is coming up off of the floor a little quicker than the other two, but not ready to touch that yet either. And Skyworks, definitely still moving down. So out of the 4, now you know why they made the news. The coronavirus is affecting all 4 of these stocks in an adverse way. Probably not the right time to touch these stocks. Just wanted to show as they hit the news that we were able to corroborate the story that these are being affected by the coronavirus in the VectorVest software. All right, other than the Oracle question, Joey, any other new questions? All right, in Cool Hand Luke, I will give you an opportunity to look at Oracle. All right, let's go to the next story. The next story is a coronavirus stock called Moderna. Moderna advances the coronavirus vaccine candidate into the clinic. They are moving hot and heavy in trying to get a cure for the coronavirus. How about this? The FDA has signed off in Moderna's, there's their drug mRNA 1273, its vaccine candidate against SARS and CoV-2, the coronavirus causing the current outbreak. The first batch of this product has been shipped to and received by the NIH for use in phase 1 study. They are moving quickly and trying to come up with a cure for the coronavirus. So let's go take a look at it real quick. Let's go back to the watch list. Let's go find it. mRNA. Did I not put it in here? Dang it, Joey. I didn't put it in here. Oh, you know why I didn't put it in here? Because we have a watch list specifically for the coronavirus. Let's go over. Let's go look at our coronavirus stocks. So you guys are privy to a list that I've created for you guys of coronavirus stocks. Let's go see if we can find mRNA 27. It's in here. Joey broke my list. It's all Joey's fault. Let's go add it. It should have been in here. mRNA. There it is. Now we will put it in there. I thought it was already one of them, but nonetheless, there it is. Moderna, all right, let's analyze it real quick. Notice that a lot of these biopharmaceutical stocks are going to be in the same class of being way overvalued because they draw a lot of money into looking at drugs. And a lot of them have negative earnings rates as well because all of the money is put into research and development. And then a lot of times once it gets to the FDA, they don't get approved and they got to start all over again. That's wasted money. So I just want to keep that in mind for you. Moderna, though, grossly overvalued, does not have good upside potential. It is not a safe stock, but what's moving it right now because of the coronavirus scare, it is in an uptrend right now. All right, it is a hold recommendations and they're growing their earnings in a negative rate. So I'm going to show you a couple of things here from the coronavirus stocks. All right, if I'm looking for the safest coronavirus stocks, I have 28 stocks in this list. All right, I've created that for you by just going out to the internet to find some of the most heavily traded or best stocks for the coronavirus, and all of these people are trying to get into play for coming up for a cure for the coronavirus. But let's say I can take this list of stocks sorted by relative safety. Remember, relative safety looks at the consistency and predictability of a company's financial performance, but it's also an indicator of risk. If I'm trying to find a coronavirus stock to play from the safety standpoint, Biogen is at the top of the list. Undervalued, good upside potential, safe stocks, just not going up in price right now, but one of the few bio companies that does have positive earnings. AbbVie, another one, nicely undervalued, good upside potential, good safety, and is moving up in price. So I can take this list of coronavirus stocks, put into your hands some of the safest stocks to take advantage of from the coronavirus scenario. How about if I want to be a little bit more aggressive with these, I can sort by RT. So the stocks that are in this list that are going up the most. How many of you watched the hot stock panel yesterday? Steve came up with INO. How about it's up 21% today? And this is one of the fastest stocks in this list of coronavirus stocks. This is the only place you get this kind of information, and being able to force rank this one watch list of stocks different ways to find out which is the best way to go. So the biggest thing about INO is that it's the fastest moving stock. The fundamentals behind it are not there, but if you're more of an aggressive player, man, that stock is moving. How about Xair? Also moving up today, up about 3%. How about I want to take it a step further? Let's go look through this list and say, you know something, I only want to find the stocks that are going up the most today. I can sort by percent price change. Codex is up, INO, NVAX, VXRT. Look at these stocks up double digits today and today alone. So now, as a more aggressive day trader, I can jump on these stocks, make the money, get out, and do it all over again the next day. But coronavirus stocks are a good way to try to make some money in the market, even though coronavirus is not a good thing. All right? How can you get this watch list? Take a picture of it while you're here right now. You got to take a screenshot because I don't have it to send out to everybody. Badger, if you want to type in the room how to show them how to take a screenshot, by all means do so. Here's the top few right now, and I'll go down from CERS. You can take another screenshot. That should give you a screenshot of all 28 stocks that are in here. I'll do it one more time. All right. Get an opportunity to take a screenshot of these stocks, and if you're a subscriber to the software, take these stocks, put them into a watch list. All right. And I think INO paid for VectorVest for the year for me, says Jake. Way to go. Way to go. All right, but you can get what? What did you say? Jay say, hey, Glenn, can you remove your big head, please? Wow. All right, hold on. Let me.
Move back up to where you're supposed to be.
No, I'm going to. So Joey is going to do it. Wow, did you really say that, Jay? Holy smokes. Wow, and Charles didn't say it as nastily as you did. There you go. Joey took me off the screen so that you can take the shot. All right, hopefully everybody took the shot. All right, don't take me off again. And I'm going to scroll down to the rest of it. There you go. Take your shot again. And Joey has me off. There you go. Thank you, Badger. Use the Microsoft snipping tool. And B says, pretty as it is. No, Jay said, move my big head out of the way. Wow, Jay. I know, Matthew, I hear that. That Jay was just brutal. That was brutal. That was brutal. And Claude, Joey says thank you. Claude says thank you to Joey. So there you go. You guys should have taken 2 screenshots. You should have all of the stocks now that you can make your own watch list. Thank you for that, Joey. All right. So you're welcome. That's cold. I know that was cold. All right. Let me get back to my watch list for today, and we're going to move to the next story. All right. Hold on. Let me let it pop up. Boom. Let's go to the next story. Another Jim Cramer story. These are now my social media stocks. All right, Cramer talks about what stocks are hitting in social media. Facebook, Snap, Twitter, Pinterest. Earnings were about at the expectations. It was about at expectations, Cramer said, about the earnings reports on Facebook, Snap, Twitter, and Pinterest. None of them had perfect results, but Facebook and Snap had run going into the quarter while Twitter and Pinterest had sold off ahead. So Facebook and Snap got pulverized while Twitter and Pinterest caught fire. Let's now see if what he's saying is right or not right. Let's go back to our watch list today. All right, and let's go look at Facebook. Let's go look at Twitter, Pinterest, and Snap. Let's analyze them real quick. Facebook, undervalued, good deal. Twitter, way over its value. Again, doesn't make it a bad stock. Pinterest, way over its value. Doesn't make it a bad stock. And Snap, way over its value. Notice that out of the 4 social media stocks, Facebook is the only one that is undervalued. Let's look at further. RV, upside potential on Facebook, good. On the other 3, all below 1. So Twitter, Pinterest, and Snap don't have really good upside potential. These are stocks that you trade, probably not stocks that you hold on to, whereas Facebook might be. Look at safety. Facebook is a safe stock. Tells me that when earnings comes out, the stock tends to meet or exceed earnings. Twitter, Pinterest, Snap, earnings come out. These stocks are iffy if they're going to hit earnings or not. Remember, earnings is the engine that drives the stock's price higher. Last but not least, even though the fundamentals on Facebook are there, the stock is not going up in price right now. Twitter is, by the way, going up in price right now. Even though the fundamentals are not good on it, it is at least in an uptrend right now, whereas Pinterest and Snap altogether. Look at Pinterest and Snap. That's what I like to call 3-time losers, whereas Twitter right now at least is moving up, and on Facebook, the fundamentals in the stock are there. 4 different stocks, 4 different ideologies about how to trade these stocks. Earnings growth rate on Facebook, growing in double digits. Pinterest, on the other hand, is growing at 43%. Even though the stock fundamentally is not sound, the stock's not going up in price, but they are growing their earnings. Not sure why the stock is going down as much as it is, but it is. It's because they're not making money. They may be growing there. What's their earnings? There it is. They have negative earnings. But now, even with the negative earnings, they're trying to get back into the positive territory, even though they're growing their earnings at a clip of 43%. Interesting. All right, this is why we analyze the stocks in the VectorVest software to get what I like to call the rest of the story. Let's go take a look at these graphs real quick. We'll right-click. We'll view the stock graph. So out of the social media stocks, which ones would you like? Facebook was up and down all throughout the year. Love the earnings on Facebook, but up and down. All it takes is one story about Facebook leaked out information that affects it. Bam, it gets hit. And then it runs, and then the coronavirus hits. Bam, it gets hit. But earnings overall looks good on the stock. Just be careful with Facebook right now. Right now, approaching a level of support right here at 178. Just keep your eyes on that if you're trading it. Same thing with Twitter. Twitter is a lot more volatile. Look at the big pull-off to the downside on Twitter and watch earnings. Look at the earnings fall. It is still higher than it was a year ago, but look at the fall on the earnings of Twitter. Next one, wow, Pinterest. Man, oh man. So the stock is growing its earnings at a clip of 43%, but look at the price. Look at the price action on Pinterest, and the last one is Snap. All of the social media stocks are feeling the effects of what's going on in the coronavirus. It's tough to pick any one of these, but they did make the news, so we're corroborating the stories. It's tough to pick any one of these if you're going to try to get into them. All right, let's see. Are there any questions? Keep your eyes on the VectorVest MTI. Sorry, I just got in. Can you repeat what your coronavirus stocks are? Rajiv, I'm going to have to see if I've got time at the end to go back through. There's 28 stocks in there. What's a good entry for Facebook? Let's go look at these stocks real quick. That's a good question, Charles. Let's go look at Facebook again. What am I looking for? Probably looking for a bounce off of this level of support, either here at 178, or better yet, notice that I have moving averages on here. And what are my moving averages? They are, what are they? I don't want that. There they go. EMA 30, 10 and 30. Nope. I'm going to put on the 3 and the 8. I'm looking for a 3-8 crossover to the upside. So yeah, the stock's price is going down. The 3 and the 8 are still negative. I'm looking for the 3 to go above the 8 before I jump on board with it. Massive bear flag. I got a flag here. Yeah, I do. What we also would call it a wedge. Look at that. And it's a falling wedge. Look at that. So that is, is that what you're looking at, Cool Hand Luke? That is definitely. So what am I looking for? Another way to determine if I'm in it or not. I shouldn't be holding it, but if I am, as long as it stays into the wedge, that's fine. Leave it alone. I still wouldn't been in it right now, but a wedge is a good way to at least look at it. Number 2, if you're still holding it and it breaks to the bottom of this wedge, you probably need to get out. All right, you probably need to get out. All right, so Cool Hand Luke, hopefully that's what you're talking about. But there is a wedge or a flag, however you want to call it, but the impending side of the move is to the downside. Can you add MTI or RSI to see if you have a bearish divergence? MTI cannot be added to a stock. MTI can only be added to a market timing graph. RSI, though, can be added to the graph. That's going to tell me if the stock is overbought or oversold. Even if I put RSI on here, I'm going to think that the stock, from a technical standpoint, let's go to technical analysis. Let's go add RSI. I'm sure that the stock is probably at a level of being oversold. Oh, not quite. It's still just above 30. So it's not there yet. It's not there yet. All right, but it's very close. So it's not at the level of being oversold, not until the RSI drops, and these should be RSI 10. Not until it drops below the value of 30 on RSI is it considered to be oversold. But you can add any technical indicator onto a graph. All right, solar stocks won't be touched today, Charles. I won't be able to take it, at least not today, not unless they made my list of stocks that made the news. And Theo, don't put any new stocks in yet. At the end, let me get through the stories. At the end, I will look at all of your stocks that you're asking me for. Right now, folks, understand, huh?
Well, most of them.
All right, so understand that Trending Thursday is about the news stories that I find out there, that I put into here, that we're looking at. Any individual stocks, give me an opportunity towards the end to look at them. All right, do that. Don't put them in now. Don't put them in now. All right, any other questions? Joey took it away. That's good. Let's go to the next story. Stocks, this is my hit or miss. These are the stocks that either hit or missed earnings throughout the week. Nordstrom shares drive on earnings miss. Eric Nordstrom to become the sole CEO. So, earnings came out on Nordstrom, they missed. Let's go to Target. Target reports mixed fourth quarter results, touts same-day e-commerce growth. In fiscal 2020, Target has said earnings per share will range between $6.7 and $7. Compared with the analyst estimates of 6.87. So it looks like going into the fiscal year 2020, they may be right in the range of what the analyst thinks. Kohl's stocks gains on earnings and sales beat estimates, and the retailer sees acceleration of traffic. So notice that all 3 of these right now are all retail stocks. And Visa flags hit to second quarter revenue due to coronavirus outbreak. Visa and MasterCard are 2 of really good stocks in the market, but now even Visa is being affected by the coronavirus. So these are my hit and miss stocks. Let's go take a look at them. There's Visa, Target, with Kohl's, and Nordstrom. Let's analyze them real quick. Visa, a little bit over its value. Target, under its value. Kohl's, fairly valued, pretty much right close to its value, and Nordstrom's also very close to its value as well. Upside potential. Visa's got really good upside potential. That is a stock that I would like to hold. How about Target? Target's got good upside potential as well with a value of 1.4 on relative value. Kohl's upside potential is just there. It's at 1.02, so it's still favorable. Whereas Nordstrom, on the other hand, the upside potential is not there. Safety. Visa's a good safe stock. Target's a safe stock. Kohl's and Nordstrom's, on the other hand, by way of relative safety, are not nearly as safe as Target and Visa. Which ones are going up? Visa is being affected, even though fundamentally it's good, it's going down in price. Target, fundamentally it's good, it's going down in price. Kohl's going down in price, Nordstrom going down in price. So notice that all of my retail stocks that either hit or missed earnings are all going down in price, and that's the importance of looking at RT. The stocks, let's go look at the earnings growth rate. Visa growing their earnings at a clip of 18% a year. Target growing their earnings at a clip of 15% a year. Notice that Kohl's, negative earnings growth, and Nordstrom, negative earnings growth. So by way of which stocks in the retail market that hit or missed earnings, I'd pay more attention to Visa and Target. Let's go look at their graphs. Right click, view the stock graph. Let's go take a look. Visa, beautiful looking equity curve. Coronavirus hit, boom. Visa got smacked like a redheaded stepchild. My wife's a redhead. Don't tell her I said that. Love the earnings per share on Visa, though. Good long-term play. Just feeling the effects of the market and the coronavirus. Let's go look at Target. Again, Visa and Target were the two best plays, but look at that, coronavirus. Now, even though these both missed earnings, what is popping up over here? Both of these missed earnings, just, right now, just keep your eyes on them. What was it? Kohl's did hit? Man, even though Kohl's did hit, look at the price action on Kohl's. Overall, as a retail stock, probably not one that I want right now. And it did hit earnings. If I go put on earnings, this was an earnings play. It hit earnings, but even with the hit, bam. Why? A lot of people are not going to retail stores right now. They're scared to go out in public, right? They don't want no coronavirus, so a lot of people are staying home. Interesting, right? And the last one, Nordstrom, sort of like Kohl's, the stock's price is just falling off the face of the earth. So these are my hit and miss stocks, and either by way of earnings, hit or miss, none of them look really good at this particular point in time. I'm all about telling you what's happening in the market and keeping you on top of what's going on. Any questions, Joey?
How can we see the best optionable stocks?
The best optionable stocks, any stock that I have in my watch list right now, look at the exchange column, and the ones that have a little X in front of them are optionable. Notice that the majority of the stocks, just about every stock in here with the exception of the composite, every stock in my watch list today are optionable. Now, in order to find the best optionable stock, I have a tool designed for that called the Options Pro, which we never talk about in here, but that's the tool that I would use for that, not in the software itself. The VectorVest software is ideally suited for stocks and ETFs, not nearly as much for options, but we do have tools for options, just not in the software on its own. And I don't know what this is. Why is this here?
Just read this question.
Jake says, Glenn, can you check all of the stocks in the S&P 500 for me? No. Are you messing with me, Jake? I'm not doing that. Man, so don't be messing. All right. So I don't know what this thing is, Joey. Yeah, there we go. That'll work. Can you just move it over and just leave it? There you go. Stop yelling at me. I'm not touching the mouse. Stop. I didn't touch the mouse. Stop yelling at me. All right. Can you buy the VVC? Answer to that is no. The closest indicator that is out there to buy that mimics the VVC is something called the VTI, the Vipers, the VTI. That's the closest thing. It tracks about 4,000 or 5,000 stocks, I believe. That's the closest thing that we have to the VVC. All right. How about the Russell 2000? What about the Russell? I'm not talking to you, Jay. You're in timeout right now. So there you go. All right. Andre says we have a new hashtag. Hashtag stop coronavirus. There you go. All right. And thank you, Badger, for answering questions in the room for me. Take that away from me, Joey. Let's go to the next story. All right. Next story. Oops. Next story. Boop, boop, boop. So these are what I like to call stories that caught my attention. Consumer-facing companies will be the first hit if the coronavirus spreads across the U.S. We've now just seen that in our stocks that were the retail stocks. The coronavirus is affecting them. Why? Because people don't want to go out. People are getting more and more afraid. And I got somebody here that says that this is all just crap, that it's not real. Listen, until it hits home, many of you may feel that way. It is a virus, it is moving, and we don't have a cure for it yet. So I'm not in the camp of saying that it's crap. I'm in the camp of it's an issue, we need to address it, and guess what? Our economy and our way of life is being affected by what's going on. Don't look at me as the bringer of doom and gloom. I'm just reporting what I see. All right? So consumer-facing companies will be the first hit if the coronavirus spreads across the U.S. So what else did I see? How about pot stocks? Pot stocks take a hit, are having a lousy week, compounding sharp losses over the last year for the once hot sector. I keep getting that asked of me, hey, what's going on? Can we look at pot stocks? You know, we'll look at that in a second, but pot stocks ain't the way to go right now. What else is happening? Coronavirus has started an unlucky streak for casinos. Again, any place where there's a gathering, people are less likely to be gathering. And one more, how about airlines? United, Delta, and 7 other airlines are waiving flight change fees because of the coronavirus outbreak. People don't want to get stuck on an airplane. What else? How about people don't want to get stuck on a cruise ship? So not only is it affecting individual stocks, affecting our economy, but people are now not as apt to want to gather in places where people normally gather. So those were stories that caught my attention. What I will do, though, is I will look at a list for you. I will go look at the pot stocks real quick. I got the list of the pot stocks, and I'm going to show you what the average value of the list down here. We've got 205 stocks in the pot industry. I want to show you something. Out of the watch list average of them, upside potential, not there. Safety, not there. The relative time. Look at these. There's no fundamentals behind the pot stocks. They're not moving up. There's nothing good going on with the pot stocks right now. And I can do this. I can right click. I can view a watch list average. This is the watch list of all 205 pot stocks. That's it in a nutshell. Let that sink in. So for anyone who keeps telling me, hey, let's look at pot stocks. Hey, let's look at pot stocks. Good. That's what looking at pot stocks is showing you right now. This ain't the industry to be in. And I can do the same thing. I keep hearing, hey, let's look at Bitcoin. We could do the same thing. Both of those are speculative plays right now that are really not worth it for you to think about getting in. Not now. When the time comes, I will bring it to your attention when it's okay to look at the pot stocks, the Bitcoins, and things like that. But both of those are very speculative at this time. I will do one other thing. And Joey, you don't have to put this as a story. This is still part of what's catching my attention. Gold. All right, I've got 72 stocks in my gold stocks. How about looking at the average value of them? Upside potential, not there. Safety, not there. RT, not there. Let's go look at an equity curve of these. Now, is it time to get into gold? Not yet. I do see the resurgence of gold. This is the watch list average graph. I do see the resurgence of gold. Before I jump on getting gold, what is gold doing? Gold's moving sideways. So do you have good days to take advantage of gold and bad days to take advantage of gold? Yeah, you do. Let it get out of its own way first. Look at this sideways move over the last 3 months, from January until now. There you go. So you want to know what's going on with the gold stocks, the pot stocks, and things of that nature. I'm just bringing that to your attention because these are stories that caught my attention. Any questions there, Joey?
Yes.
Go ahead. Joey's going to bring them up.
Let's see. I wanted to start up here with Charles's question somewhere.
We did that one.
Yeah, the next one then.
Why it says exchange TE next to Vector? That's so that we can use it as a indicator in the software, as a stock. That's how we make it a stock in the software with that TE notification, or else we wouldn't be able to look at it as a stock. We're the only ones that track it. So you can't buy it, but we can track it as an individual stocks. Do you like using the IWM and Dow Jones for leading indicators of the market? You know something? The reason why I'm going to say no to that is because, remember, the VectorVest composite tracks 8,200 stocks. The IWM only tracks 2,000 stocks. The Dow only tracks 30 stocks. Thus the reason why, if I'm looking for any kind of indication of what's going on in the market, why we talk about the VectorVest composite every week, because of the sheer number of stocks that it tracks. That's my indicator for seeing what's really moving on. Hopefully that makes sense. What was that, Glenn? The VTI or VTI? It is the Vector Tango India. The VTI, Vector Tango India. All right. Say again?
These are just some comments.
Okay, don't want those just quite yet. Gotta keep going. Any other questions? I agree with Badger. Really, more than 125 folks in the... Oh, there you go. Badger. That's Badger doing his thing. Claude says, I'm not familiar with MarketWatch. How does Glenn find these stories? Oh, I've got about 7 different news outlets that I have tied up all the time. I'm looking at Seeking Alpha. I'm looking at MarketWatch. I'm looking at CNBC. I'm looking at the Wall Street Journal. Those are the main ones that I look for to find news on a weekly basis. Whatever news outlet you want to use, but those are the 5 or so. I have one that I look for social media stocks. Thanks to Jen, if she's in the room, gives me that. So those are just the outlets that I use to help me to find stocks to look at. All right. And is that it?
This one.
Which one? Yeah, and how can we find the MarketWatch on the software? It's not on the software, Charles. Let's do this. I'll do this real quick. Joey, this is not a story. So I'll just go out and look at MarketWatch. So I have CNBC here, but if I just type in MarketWatch, that's how you do it. And there's MarketWatch, stock market news. And I go through a lot of these different headings, depending on what I'm looking for, to find the stories that I'm looking for. All right, so there we go. I look at what's the latest news out there. I look at it and boom. Some of these stories I'll take, a lot of these stories I will not. If I'm looking at individual markets or I'm looking at investing, and I do that for all of my outlets, whether it's MarketWatch, whether it's MSNBC, whether it's Seeking Alpha, investing.com is another one that I use. So there's several different ones that I have out there, and I just go through all the things that they have there to help me to find my stories. Does that make sense? All right. And say again?
Right here, you said thank you.
Oh, you're welcome. All right, so the last thing, I got one more story. Last story, MKM's stay-at-home stocks. Interesting that, remember that people are not wanting to go out and about, but here's a list, and if you go to Seeking Alpha, and go type in stay-at-home stocks, you come up with this story. Here's a listing of stocks: video games, Activision, Tencent Music, Zynga. How about work at home? A lot of people are telling people to stay at home and work. CTSX, Team, Work, Zoom. Consumer shopping: Amazon, Alibaba, eBay, JD.com, Apron, Grub, Clorox. I made a list of these stocks. I'm going to go back to the software. And again, you can either go out to Seeking Alpha and look for stay-at-home stocks. Stay-at-home stocks, but I've created that watch list for us right here, stay-at-home stocks. And I took all of those stocks and put them into a watch list. How cool is that, folks? How cool is that? 17 stocks. And so now I've got to stay at home. And you know something? How about sorting this by percent price change on a daily basis and take advantage of the ones that are moving? That's awesome information right there. So that's my last story. I took all of those stocks from that Seeking Alpha story, threw them into a watch list. So now we've got a new watch list. And with that, I'm done. I've only got 5 minutes, but you giving me time, right? All right, so I got through everything that I needed to get through. And man, this is for you now, Joey. That's for you. And now, here we go. Now, I'm going to look for your stocks. I'm going to start off with the people who are brand new to the room. I want to give them some shine. So as I look at the name, I'm going to try to put as many stocks in here as possible. As I look at the names, only one stock per person, folks, because you guys put up a lot of stocks. So I'm going to look at the names, and there we go. One stock, KK, only one stock. AVGO, because I got a lot of stocks coming in. KK, I'm going to take OESX. All right, comma, Charles, I'll put you in here, I know, but I'm really looking for new people. ENPH, I know you really want to see that. Comma, Badger Oracle, that's right, that was a story you wanted me to take a look at. VIPS, Asif says VIPS, comma, KGC, Charles, one stock at a time. Oh, you guys not listening to me? One stock, one stock. How do I look up that on VV Unisearch? What are you saying?
I think you're talking about that watch list that you made.
It's not in Unisearch. I created that watch list, Ninja. I created that watch list. I don't have it as a Unisearch. But now once it's created as a watch list, I can use it as a Unisearch. I can create a Unisearch off of it. All right. Audie says CCI, comma, who else? Alf says LVGO, comma. Jim says AHPI, comma. Okay, thank you, Glenn. We love you. All right, now, with the amount of stocks that I've got, I will look at other stocks. So now, KK, I will take HI, and I will take MITO. All right, I will take those two. Who else gave me more than one stock? Charles did, KGC. Good. You guys didn't give me a ton of stocks today. What I got is what I got. Just like I say on the craps table, no more stocks. Oh, no. All right, Damon gave me one. And I got, all right, last two, no more stocks. KLX, don't put in stocks. I just said no more stocks. Are you guys listening to me? KPTI. All right, that's it, no more stocks, no more stocks. All right, let's go take a look. AHPI, man, something went on way back here where the stock did nothing. It sat, and more recently, it started moving up. And I don't know what happened. I got one more stock. I am going to, because that's a new name. Dahlia, if you weren't new, I wouldn't put that in, but you are new. All right, don't make Glenn mad, says Charles. All right, let's go look at this stock. Man, AHPI, another one.
I'm going to close it after this.
You closing it? Joey's going to take away my chat, so I'm not going to be able to see it. So now I gave EQX, I gave that again. That was another new name. I gave no more. Now I can't see the chat. Joey took it away from me. All right. AHPI, very interesting. I love the move going up on good volume. What moving averages? Still using, that's the wrong moving averages. Why? Who put the 3 and the 10 up here, Joey?
Right from yesterday?
I didn't do it from yesterday. The 3 and the 8, the stock is moving up. I'm going to put it on a 3-month graph now. Stock's moving up. I don't like the big volatility in it. If you're going to be more aggressive, the 3 and the 8 are positive. Watch the volume. Notice the volume is falling as the stock's price is going up. Volume is conviction. So right now, as the stock is trying, and a lot of indecision, little doji day yesterday, doji day today. How about this, though? A little bit of a gravestone doji, which could show sentiment changing on AHPI. If you own it, be careful with it. It does have a positive 3 and the 8. Watch the earnings. Earnings don't look good either. Just be careful with that. Now, Clorox, I do love it as a play. Now, notice that the stock went up nicely today. Look at the give back, though. Look at the big wick. Jesse, are you in the room? Jesse calls that hair on a wick, on a candle. A lot of hair, a lot of give back on it today, but nice open day. Love the earnings on it. Watch the volume. Again, I love to see a stock going up, but I'd rather be in a rising stock with rising volume. All right, next one, Costco. Woo! Costco bounced off a level of support. Look at that. That's a candlestick pattern known as a hammer. Look at the run up. The 3 and the 8 are still positive. A little bit of an open candle, which means the price started at the bottom of the candle and went up. But it's not higher than the close yesterday. Thus, it's a red candle. A lot of selling pressure coming in on Costco as well. I'd like to see Costco take out that level of the high. Notice where the wick stopped, right at that level of resistance. It needs to break through that level of resistance if I'm not currently in it. But I do like the bounce, the regression trade, hammer, bounce, 3-8 cross. If I'm in it right now, leave it alone. All right, one day doesn't make a trend. I like KGC. So I told you that gold was a tough play right now. KGC may not be a bad play in that space. There it is, another bounce off of that level of support. And the beautiful thing about VectorVest, it draws support and resistance for you. So I see that when it created that level of the low, looks like about Friday or so, same time when the market hit the low. As the market has been falling, here's a stock where people are going to, as far as gold is concerned, is KGC. nicely up today, very little hair. If you're not in it though, I'd really like to see the stock go above that level of resistance. If you want to be a little bit more aggressive, knowing that the 3 and the 8 just crossed yesterday, you could pull the trigger, but watch volume as well. All right, next stock, Oracle. Yeah, I'm not feeling Oracle. So we looked at Intel, we looked at Microsoft, we looked at Apple. Here's Oracle, same kind of scenario, falling off the face of the earth, not touching Oracle right now. Not at all. The stock has been bouncing between a sell and a hold, back and forth. But this was a good time to get out of the stock when the 3-8 crossed. Then it broke through a level of support and is still going down, creating another level of support where it's trading at right now. I'm not ready to touch Oracle. Hopefully no one is trading it right now. Looking at CCI, it's a REIT. REITs tend to be good. And you know something was a little bit more resilient than a lot of other stocks during the coronavirus scare that's still in play. It got hit, but look at the fast rebound. REITs are not a bad place to be right now. If I'm in it, because the 3-8 cross, leave it alone. What I'd really like, if I'm not in it, currently to look at the level of resistance before I break out. I do like that the earnings is higher than it was 3 months ago. Next stock, OESX, electrical. Woo, not feeling that. The 3 and the 8 crossed here. As I look, and not only, you know, when you talk about these stocks, look at when you should have gotten out. The 3 and the 8, any kind of moving averages you like, whatever feels comfortable for you. You need some semblance of a moving average to help you to gauge when to get out of a stock to take its profits and not let it all get away from you. If you're still holding OEX right now, why? All right, think about it. The stock's price is going down, the 3 and the 8 cross. Even if I put on something like a 40-day moving average or a 10-day moving, any move, use some semblance of a moving average to help you to get out of the stock. All right, so we're using the 3 and the 8, 3 and the 8 cross. I would love to get out then to wait and still hold the stock until right now. HI, just going down. Nothing to say about it. The stock's earnings per share is lower than it was 3 months ago. The stock is just trending down. It's bouncing off a level of support, but you know something? If I'm looking for an entry, let's look for a potential entry with the 3 and the 8 giving me the opportunity to get in. Look for something to give you an opportunity to get in instead of trying to guess that, man, it hit a low, it's got to go up. And you know something? Hey, it did go up and now it went back down. Be careful about that. Wait for something to confirm your move to get into this stock. Stop trying to catch the falling knife. AVGO, definitely moving down. Found a level of support, bounce. And look at the stock's price moving over the last 3 or 4 days, moving a tad bit sideways with a down day today. Earnings per share lower than it was 3 months ago. Remember, folks, I'd rather have you in a stock that's rising with rising earnings than to fall with falling earnings. That's the double whammy. That's the double whammy. Be careful with AVGO. The stock is currently a sell. The 3 and the 8 are bearish. The stock may have found a level of support, but let it bounce and let the 3 and the 8 cross back up. ENPH, still a beautiful stock. Even with the coronavirus, was resilient enough to jump back up. Love the earnings per share down below. Love the price action on the stock. Love that the volume is even close or higher than its average volume. This overall is a good stock. What did the stock do today? Look at the wick. The wick stopped right at the high. Tom, you know what to type in the room. The wick stopped right at that level of resistance and did what? It pulled back. Thus the reasons why I always say, let's see if the 3 and the 8 cross, number one. Number two, let's see if it can break through a level of resistance. Did Tom type it in the room yet? Somebody's probably going to type it in the room that this stuff really works. But looking at those levels of resistance, and this is important. This is why I wait to see if a stock can break through if I'm not in it. But it stopped right at that level of resistance. Next one, man, VIPs, big move up today. Love that the stock might have found a level of support. 3 and the 8 cross, big volume. Earnings, even though it's starting to fall, is still higher than it was 3 months ago. Nice update, very little wick. If I'm not in it yet, let's go a little higher than the high to make sure we're still buying into a rising stock. Was this an earnings play? Type it in there. No, it was not an earnings play, but something is going, oh, VIPs, because mail order, remember I told you about the stay-at-home stocks, this probably would be one of them as well. People don't want to go shopping in person where there's other crowds, they're doing it online. So VIPs is one of those stay-at-home stocks. Let's go to the next one, which is JNUG. Again, we did look at KGC. Here's JNUG. I'm not a big fan of gold just yet. I see that it's moving higher. If I want to get into JNUG, though, let's wait for the 3-8 to cross. And it's got 2 levels of resistance to go through as well. And once it breaks through and the 3 and the 8 cross, you got a good upside, at least to the level of 105. That's a good run up. Let's let the the stock tell you it's okay to get into it instead of guessing right now. Hey, the stock's going up. Let's go. Let's go. I got nothing to confirm the move yet. Let the 3 and the 8 or whatever moving average crossover you're using help you to get in. On KPTI, another drug biomedical, big jump up on big volume. What's the stock doing right now? Moving sideways. If I'm not in the stock, let it break above that level of resistance before I pull the trigger. That helps to always ensure that I'm buying into a continually rising stock. And let's go see what else is in here. MITO, not touching that. There's nothing good about it. There's nothing good. It had one good day. What's this? Thursday, Wednesday, Tuesday. And look at that. After that, it's falling back down. I don't know what they do. Don't care. Right now is not the time to be in it. It's not the 2 down days in a row. I got nothing technically helping me. I got nothing fundamentally helping me. Yeah, I'm not feeling MITO right now. This is definitely aggressive play, and unless you know what's going on behind it and you've got some news that you think is going to be pertinent to the stock's move to the upside, that's the only way I would play it. All right? I don't know anything about the stock except for looking at the graph. LVGO, nicely moving higher. The 3 and the 8 crossed yesterday. Big, nice updated though, but a lot of hair. Look at that, Tom. Where did it stop? Where's the body right now? Right below that level of resistance at 28.56. Man, this stuff works. Make sure when you buy into a stock that it is moving, breaking above your resistance level or with the 3-8 crossover. And the last stock we have is EQX, another gold stock. Now, unlike all of the other gold stocks that I looked at least the 3 and the 8 is crossing here. I do like that, so maybe this might be one gold stock to take a look at. Nice open day, not a ton of candle, not a ton of wick at the top of the candle. Love the hammer play right here. Reversal coming off of that level of support. The 3 and the 8 did cross, stock as a buy. If I'm going to play gold, this is probably the better play within gold. Whew. I'm done. Joey, put my comments back up there for me. Anybody else got any questions? Holy smokes. A stock like MITOP makes Glenn sad. Yeah, I'm not feeling that on that MTI. KGC crossed, didn't it? No, I don't think KGC crossed. Not yet. Let me go back to it real quick. KGC. Oh, it did. So that's 2 of them. Sorry about that. Thank you for that, Charles. So KGC did cross. And what was the other one that crossed we just looked at? KGC and EQX. Those are 2 that I would take a look at as far as gold plays. All right. Any loss for sale? No, I'm just following. Stop moving unless you.
I'm trying to find them.
All right, then stop moving. Glenn said there's a trending Thursday link. Yeah, it's on YouTube. If you go to YouTube and you go to and find VectorVest, you'll see all of our trending Thursday videos there.
There's one comment from Bob, but I can't see.
Bob, are those exponential moving averages? And yes, they are. All of our moving averages that I use are exponential moving averages. So one other thing, Joey, type it in the room. The stockmadness.com. You guys have been asking, all my VectorVest subscribers have been asking about the next contest. There it is right there. All right. Stockmadness.com. Joey is typing it in the room. You already did? All right, click on that link. I want to click on that link because I don't know what it looks like. Stockmadness.com. This is our next contest.
$10,000 in cash and prizes.
$10,000 in cash and prizes. Ooh. All right, what's this? Stock Madness. So sign up for, you know something? I'm signing up for it right now. I don't know. I'm going to put in here, Glenn. I'm signing up for it right now. If I were you, I'd do it right now. Do it right now because I'm going to win. Glenn T at VectorVest.com. And bracket name, I'm going to call it Trending Thursday. Woo! No.
Ooh-wee.
There's my bracket name. There's my bracket name. There we go, baby. Ooh-wee. And so now I've got to make, here it is, select the stock you believe will have the highest percentage gain for each round, just like we do in March Madness. This is going to be a fun contest. I like this. All right, so it's like March Madness, except for We're going to put stocks that we think we're going to have the highest percentage gain for each round, and that's going to be kind of cool. All right. I'm going to sit my bracket. No, I'm submitting it. Oh, I got to put stocks in here. There it is. 5,000 cash, a full year of VectorVest real time. Total prize, that's $6,000. Options, paycheck, ultimate. Look at this. We're giving away a lot of stuff. Holy smokes. Folks, if you ain't doing it now, you need to. www.stockmadness.com. You saw I just entered a portfolio in there, and then I got to start putting some stocks in there. And that's going to be kind of fun. I think that's going to be kind of fun. All right, so I told marketing that I would promote it out there for you. How many of you have gone out to sign up for it? Type a yes in the room. I'm curious to know. How many, thank you for that, John. I appreciate that. How many people have already just signed up for it just right now? All right, you don't have to put your stocks in yet. How many times can we? Once, Jav. Can they only do it once?
I didn't read the rules.
I didn't read the rules either. I don't know. Well, how about, man, I don't know. All right, you folks in the back of the room, please throw us a like button. There you go. Joey Dunkin' Donuts going to have, leave Joey alone. Thank you, Joey. Yeah, and my birthday's tomorrow, so thank you for that, John. John is on my Facebook, as a matter of fact, yes, too. Mary signed up. Way to go, Mary. I think that this is going to be a fun contest. I really think that this is going to be a fun contest. Boeing getting slammed. So guess what, Cool Hand Luke? I wouldn't put Boeing in this list for my stock madness. All right. With that, folks, thank you all for joining. People, if you haven't already, please subscribe to the channel. I'm trying to get us out to 10,000 subscribers. All my new people, did you find this stuff helpful? All my new people sitting in the back of the room, did you find it useful, and will you be back? And will you be back? I'm very curious, and if you're going to put in here that you found it useful, but you didn't like it, put that. I don't care. That's fine. I'm just curious to know, all my new people, there's a link to sign up for the trial. It's for 99 cents. It's a 99-cent trial. 99-cent trial. There's the link, www.vectorvest.com/YT. Audie, thank you for your comment and saying that as a new person, you found it useful. This is fun. This is fun but informative. So, and then we give an opportunity to look at your stocks. So I think we had a lot of people here today. Yes, Joey? Yeah. All right. So with that being said, did we bump up in subscribership today at all?
I didn't check it.
All right. Folks, I really need you guys to subscribe if you're brand new, if you haven't already. Please do. Trying to get to 10,000 subscribers. We're trying to get there. Happy long-term VectorVest user, 99-cent best deal ever. Thank you for that, B. I appreciate that. I made 1 year subscription for 10 years worth of one trade. Wow, that's awesome. Folks, that's not me talking. You're talking to other VectorVest subscribers in this room. All right, so Badger, thank you for moderating in here today. Joey, thank you for pointing out the questions. And thank you for that, KK. I appreciate that. I'm just a person, my friend. Charles, we looked at ENPH. Oh, Charles made all of his money on ENPH. He paid for a subscription. There you go. All right. I got to go. It was nice seeing you guys this week. All my new people, again, thank you all for being here. All my regulars, thank you for being here. We'll see you guys next Thursday. Adios. Arrivederci. Ciao. Au revoir. Sayonara. See ya. See ya. Bye. Woo!